Hi, this is Lara at Elliott Wave Gold with an extra video update for you after the session Wednesday 11th of October has closed for the New York session. Let's always assume the trend remains the same until proven otherwise. The bottom line today is while price remains within the pink base channel in my first hourly chart, assume upward movement will continue. If the lower edge of that channel is breached by downward movement, expect a pullback has begun. While price remains above 1284.48, we should assume upward movement should continue. If price does break below the base channel and then below that price point, expect a pullback has finally arrived to test support at prior resistance. The target for it to end would be 1281, but it could be as low as 1273. Elliott wave analysis first, classic analysis last. I have two wave counts. Both of my wave counts at the weekly chart level see the December 2015 low as the end of the cycle degree A wave, which subdivides as a 5-wave structure, and this is where cycle wave B begins. There are more than 23 possible corrective structures that B waves can take. It's impossible to have any confidence in which structure they have taken, usually until quite close to or at the end. And so it's essential to be flexible and use alternate Elliott wave counts to manage the various possibilities. This wave count expects cycle B as a double zigzag. I'll just do a very quick summary of this weekly chart because I went over this in more depth for members' end of week video. The first zigzag in the double is labelled primary W. The double is joined by a 3 in the opposite direction labelled X. The second zigzag in the double labelled primary Y subdivides 5, 3, 5. So we're looking for a 5-wave structure up to complete at the weekly chart level for intermediate C. So far we may have 1, 2 and a third wave beginning. The target is for it to reach equality in length with the first wave because the first wave here is quite a long extension. Let's take a look at how the third wave may be beginning at the daily chart level where the low labelled -2 is this point down here. This could be a single zigzag and now we could be looking at the start of a third wave up. However, these first 3 days of upward movement, although completing a bullish candlestick pattern, have, if bar charts volume data is to be believed that is, have very, very light volume. And they're not really very strong candlesticks. This is a little bit unusual for the start of a third wave for this market, and so that puts a little bit of doubt on this first wave count and adds a little bit of confidence, a little, to the second Elliott wave count, which we'll get to next. We have to consider all possibilities, though it's important. Let's have a look at how this third wave may be beginning. Actually, before we go there, after we've got the start of a new trend, it's really, really common for gold for the first second wave correction within it to be very, very deep. Here's a pretty good example. This wasn't so deep, but it is a reasonable second wave correction and it shows up at the daily chart level. After we've broken above resistance at the upper edge of this Elliott channel, it would be pretty typical to see price curve around and come back down to test support. And so for the first second wave correction within the impulse of -3, I would expect for a very typical look, minute wave 2 to last at least 1, 2 or 3 days to show up at the daily chart level and may find support at this trend line right here. So I'm copying that over to the hourly chart, the second one that is. Okay, let's look at the first hourly chart where the low for -2 is this point here. This first hourly chart assumes the trend remains the same until proven otherwise. Now, although it's a more typical tendency for a second wave correction to be deep than shallow, let us assume that upward movement continues while price remains within this channel, and this trend line here is not too far away. If this wave count is wrong, we shall know within the next 24 hours. -3 must be an impulse that is the only allowable Elliott wave structure for this third wave. We may have an impulse for -1, a shallow double combination for -2, and the middle of the third wave for -3 may be beginning here. Minuet 2 may not move beyond the start of 1, below 1284.48. It shouldn't get too close to that point though, because the lower edge of this base channel should offer very, very strong support if this hourly wave count is correct. But if price breaks below this trend line at the hourly chart level, then we should be using this wave count. It's identical to that first wave count up to this high here, and now it expects we're going to get a more time-consuming and possibly deeper pullback for minute wave 2. Minute wave 2 could be unfolding as a flat correction, subdividing 3, 3, 5. If B is over here, and if it doesn't move higher, it's a 1.01 length of minuet A, and so the flat would be a regular flat. If that's the case, then a target would be about 1281, where C would be about even in length with A, and maybe correct only to the 0.382 Fibonacci ratio of minute wave 1. However, that target does look to be a bit shallow. If it's wrong, then use the 0.618 Fibonacci ratio as possibly a more preferred target, and we'll look at that in another hourly chart later on in the video. If price gets down this low, expect it to find very, very strong support at the lower edge of this pink Elliott channel, which has been copied over from the daily chart. Minute 2 may not move beyond the start of 1, below 1260.72. The final target for minor 3 to end remains exactly the same for both charts. At the weekly chart level, this is the second wave count. I'm not labelling them main and alternate. I'm just going to label them first and second, and price is going to tell us which one is correct. While the first wave count expects a huge big bull movement, the second wave count expects only a short-term bounce. If a triangle is unfolding for cycle B, then we've got a single zigzag for A, a single zigzag for B, which did not move beyond the end of A, so it's a regular contracting or barrier triangle. A double zigzag for C, that's the most common triangle subwave to be a more complicated multiple, so this fits with the most common pattern for this structure. Now we'd be looking for a single zigzag down for D. Let's take a look at that, where this low here is this point down here. So we've got a 5, 3 up, and then we'll need a 5 down. And so the upward movement for the last few days could be the start of an intermediate degree B wave. This yellow best fit channel is exactly the same as the pink channel on my first daily chart. After a breakout above resistance, this wave count expects a pullback for a B wave within a B wave, and then more upward movement. Intermediate B may end about the 0.618 Fibonacci ratio at 1319. I would not want to label it over here just short of the 0.382 ratio. That's far too brief for a B wave at intermediate degree. It should last a few weeks. It can't move beyond the start of A above 1357.09. For my first wave count, I'm seeing this upward movement as 1, 2, 3, or 1, 2, 3. 2 could be over already, or it could move lower. So both wave counts see this as a 5, 3, 5. Let's see how this could also be working at the hourly chart level, where the low of intermediate A is this point down here. So we could have a 5 up here, which could be an A wave or a first wave, and a 3 down could be continuing. For my first wave count, it could be over either here, or it could move down a bit lower to the 0.382 ratio, and this scenario looks at a possible lower ending for this flat correction, which here is labelled as a B wave. The target is a $3 target zone calculated at 2 wave degrees, so it should have a reasonable probability, and it would see price come down pretty close to support at the upper edge of this channel, which is copied over from the daily chart. So there are 3 scenarios presented here for the hourly chart. All of them see overall an upward trend, at least for the short or mid-term, intact. 2 of the 3 scenarios look at a pullback early on within this upward trend, developing either here or very, very soon. B can't move beyond the start of A, when A is a 5, below 1260.72. I'm not going to go over the weekly chart. I did that in the last end of week video for members. So I'm going to jump straight into the daily chart, and this is the problem I've had for the last 2 days with stock charts data, which make a reliable classic analysis absolutely impossible today. The candlestick for the 9th is missing, and this candlestick here is wrong. It should be green, here it's red. So you can see the correct candlesticks, I think, on the bar chart data. If this volume data is to be believed, we've got a balance of volume day downward, and it's showing a decline, and so that would be bullish, but I'm not going to give that any weight because, well, they need to fix their data first, and hopefully that will be done within the next 24 hours. That would make my job a little bit easier. On balance volume, I really don't like using it with motive wave because it tends to squish it up a little bit too much. It's a lot easier to use here on stock charts. So if this is to be believed, we've got a bullish signal here a bearish signal here moving down from resistance, and so I'd read that overall as neutral, maybe at support that may halt any fall in price. If it moves below the purple line, this new yellow line is just a little bit further away and would allow another day of downward movement. RSI is neutral, there is room for price to rise or fall. ADX is declining, and the positive and negative DX lines are whipsawing about each other at this stage, so it's not telling us if there is a clear trend at the daily chart level for gold at this time. It is a lagging indicator though, it's based on 14-day averages. For most recent days, ATR is declining, indicating that there's some weakness in this upward movement, but again, I'm not, with these candlesticks being wrong, I don't know how much we can read into that. Stochastics reached oversold after reaching overbought, and now it should be returning possibly up to overbought, so there's again plenty of room for price to rise. Bollinger Bands are contracting as price rises, and that supports the alternate, or the second Elliott wave count, which sees the upward movement as a B wave. There should be something off about B waves, and contracting Bollinger Bands certainly fits that definition. It doesn't look like necessarily the start of a new, strong, sustainable trend at this stage. MACD still bearish. Okay, let's have a look at some volume analysis using bar chart data. Here, and some candlestick pattern analysis. We've got 3 reasonable green candlesticks in a row. That's 3 white soldiers coming after obvious sustained fall in price. This is a bullish reversal signal. But they don't have good support from volume. The volume for these days is a lot lower than these prior days, and so at this stage that supports the idea that this could be a B wave if this volume data is to be believed from bar chart. And I have noticed sometimes that they do change their volume data retrospectively, which is another reason why I prefer stock charts data, which is usually more reliable, just not at this stage. So I'll keep an eye on this. If this is to be believed, this offers quite a strong support for the second Elliott wave count, which sees this upward bounce as part of a B wave. B waves should exhibit weakness, and very, very commonly do exhibit weakness in volume. I do not like using on-balance volume with motive wave because I can't, this is just too squished up, and so the trend line analysis just doesn't work as well. And it's difficult to draw the trend lines and see exactly which points you're drawing them across with motive waves trend lines. But if this is to be believed, then we have a bullish signal with a break above resistance from on-balance volume. And RSI for both stock charts and bar chart data is neutral, plenty of room for price to rise or fall here. That's all from me at the end of your trading session for the 11th, and I hope that all of our members are having an awesome day.